Welcome to Value Investing Summary, from Graham to Buffett and beyond over the next. Whether you're new to the stock market or a seasoned pro looking to sharpen your skills, this audiobook has something for you. Based on the brilliant book by Bruce Greenwald, Judd Kahn, Paul Sunken, and Michael Van Biema, we'll explore how value investing started with Benjamin Graham, evolved through Warren Buffett, and still thrives today, in 2025 and beyond. You'll learn how to spot undervalued stocks, calculate their true worth, and build a portfolio that beats the market with less risk. Plus, we'll meet 8 legendary investors who've turned these ideas into billions. So, grab a coffee, settle in, and let's unlock the secrets of value investing together. Ready? Let's get started. Chapter 1. What is value investing? The foundations explained. Picture this. It's 1934, the world's reeling from the Great Depression, and 2 guys, Benjamin Graham and David Dodd, write a book called Security Analysis. That book didn't just launch a career, it launched a revolution. They called it value investing, and here's the gist. Buy stocks or any security way below what they're really worth, and hold them until the market wakes up. Simple, right? But oh so effective. Graham imagined the stock market as a moody character he dubbed Mr. Market. One day, Mr. Market's euphoric, overpaying for everything. The next, he's panicked, selling cheap. Value investors? They don't follow his mood swings. They buy when he's low and wait. The key's a margin of safety, that gap between a stock's price and its intrinsic value. It's like buying $1 for 50 cents. Does it work? You bet. Studies show value stocks think low price to earnings or price to book beat the market by 3 to 5% a year, going back a century. Big names like Warren Buffett prove it too. Take his 1973 buy, the Washington Post Company. Market price? $80 million. Real value? Over $400 million. That's the power of value investing. Low risk, high reward. It's not about charts or economic forecasts. It's about digging into a company's guts, its assets, its earnings, and finding the bargains others miss. That's what sets value investing apart. Chapter 2. The evolution of value investing from Graham to today. Now, Graham's world was the 1930s think busted companies trading for peanuts. He loved net stocks firms worth more dead than alive, priced below their cash minus debts. Back then, you could scoop those up like candy. Today? Not so much. Markets are smarter, faster. So how's value investing still kicking in 2025? The book published in 2001, right after the dot-com bubble, shows us how it's evolved. Graham's curse stays. Buy cheap, stay safe. But modern twists make it sing. Behavioral finance explains why stocks get mispriced, investors overreact, panic, or chase fads. Competitive analysis spots companies with moats, think Coca-Cola's brand or Intel's tech edge. And risk? It's not about price wiggles, it's about losing your shirt for good. In 2025, with AI hype and global chaos swirling, value investing's a rock. Economic laws don't bend, competition kills excess profits unless a company's got an edge. That's why this strategy's timeless, whether you're eyeing tech flops or old-school manufacturers. Chapter 3. The 3 Pillars of Valuation, a step-by-step guide. Alright, let's get practical. How do you figure out what a company's worth? The book gives us 3 pillars, 3 ways to nail intrinsic value. Grab a notebook. This is gold. First pillar, asset value. This is the ground floor. What's it cost to rebuild a company today? Start with the balance sheet: cash, buildings, inventory, adjust to current prices, then subtract every debt. Take Hudson General, a ground services outfit. Its gear and contracts were worth $92 million, but the market said $66 million. Bargain alert. This is Graham's turf, hard, tangible stuff you can trust. Second pillar, earnings power value, or EPV. Now we're talking muscle, how much cash a company churns out, year after year, no growth assumed. Take its operating earnings, say, $10 million, tweak for taxes and upkeep, then divide by a fair return, like 10%. That's $100 million in value. If earnings beat a normal return, you've got a franchise, think WD-40's brand, locking in profits. Third pillar, growth value. This one's tricky, only for rare birds with a real edge. Forecast cash from growth inside that franchise, discount it back, and add it to EPV. Intel's microprocessor mode? Worth billions. Expansion elsewhere? Met competition eats it up. Here's the drill. Start with assets, layer on EPV, sprinkle growth if it's legit. Compare to the stock price. If it's 30 to 50% below, you've got your margin of safety. Tools? SEC filings, a calculator, and some elbow grease. That's how you value like a pro. Chapter 4. Finding value. Where to look in 2025. So, where do you find these gems? The book says, fish where the fish are, away from the crowd. Out of favor sectors, like energy when everyone's green crazy, hide deals. Small stocks, microcaps? Wall Street ignores them, so prices lag value. Special situations, spin-offs, bankruptcies offer quick wins with a push. Try this. Scan the new lows list daily. Check broken IPOs, height fades, value stays. In 2025, watch tech, AI bust could drop solid firms cheap. Geopolitical mess, say, trade wars, might tank exporters with fat assets. ESG backlash? Old school industrials could shine. Screen for low PE, high cash piles. It's like panning for gold, messy, but the nuggets are there. Chapter 5. Building a portfolio, balancing risk and reward. Found your bargains? Great. Now build a fortress. Risk isn't stock dips, it's losing money for good. Your shield? That margin of safety. Spread bets with 20 to 30 stocks, or go deep with 5 to 10 if you're a research nut. No deals? Sit on cash or an index fund. Buffett's done it. Patience is your superpower. Wait for the pitch, Mr. Market always swings wild. Sell when price hits value, not before. In 2025, with rates climbing or chaos brewing, cash in hand means you pounce when others panic. Chapter 6. Profiles of Value Investing Legends, Lessons from the Masters. Let's meet the rock stars, 8 value investors who turned Graham's ideas into fortunes. Warren Buffett, the king. Buys quality, like Coca-Cola, at discounts, holds forever. Lesson? Moats matter. Mario Gabelli thinks private market value. What's a firm worth in a sale? Nailed General Housewares that way. Glenn Greenberg bets big on a few, like Freddie Mac, after insane homework. Depth wins. Robert Heilbrunn invests in other value gurus. Smart if you're busy. Seth Klarman loves distress, pins oil bonds paid off big. Chaos is opportunity. Michael Price buys cheap, then shakes management up. Chase Banksword. Action unlocks value. Walter and Edwin Schloss. Simple, cheap stocks like Southern Peru Copper. Basics beat Flash. Paul Sonkin. Microcap Hunter. Centennial Technologies doubled fast. Small pays big. These folks show there's no one way, just discipline and smarts. Chapter 7. Case Studies, Value Investing in Action. Time for stories. WD-40. Tiny firm, big franchise. Assets? Meh. Earnings power? Huge. Brand and reach made it worth more than its $90 million price tag. Intel, microchip giant. Franchise value topped $100 billion, but growth outside that? Overhyped, stick to the moat. Centennial Technologies, microcap at $4, worth $8, sold at $21 after an Intel deal. Small bets, big pops. These prove it. Know the pillars, spot the edge, win. Chapter 8. Why value investing beats the market. Still skeptical? Check the scoreboard. Value portfolios crush the S&P by 3 to 5% a year, decades of data. Firms like Tweedy, Brown hit 20% returns when the market did 16. Buffett? Legend. Why? People overreact, panic sells, hype buys. Franchises hold value. Fads don't. And that margin of safety? It's a safety net Wall Street ignores. In 2025, with AI bubbles or trade shocks, this edge shines brighter. Chapter 9. How to start value investing today, a beginner's toolkit. Ready to jump in? Here's your starter kit. Step 1. Learn. Read Graham's Intelligent Investor or listen summary already in our channel. Step 2. Practice. Pick a stock, say, a small tech firm, crunch its asset value, EPV. Compare to price. Step 3. Hunt. Screen for low PE. Check new lows. Step 4. Build. Start with 5 stocks, keep cash handy. In 2025, tech flops or global underdogs. You've got this. Chapter 10. Common pitfalls and how to avoid them. Watch out, traps await. Overpaying for growth? If it's not in a franchise, skip it. Ignoring risk? Cheap isn't value, check the bones. Impatient? Waiting's your edge. Dodge these, and you're golden. Conclusion: your path to value investing success. And there you have it, value investing summary. From Graham's 50-cent dollars to Buffett's billions, this strategy's a proven winner. Master the 3 pillars, hunt smart, stay patient, you will beat the market, and sleep easy. In 2025, as markets twist and turn, you've got the tools. Start small, analyze one stock, see where it takes you. Thanks for listening.